On this episode of the podcast, we talk about LLC versus a sole proprietorship and which one is right for me or for you. Also, how do I pay myself from my LLC? What advantages are there in a single member versus an S-Corp election? And what's a reasonable salary to pay oneself if you're an S-Corp? Talk about that stuff and a lot more on this episode. What's up, my friend? It is Ryan Coral from Studio Sherpas, and this is the Grow Your Video Business podcast, where I talk about how to grow your video business without burning out. We cover how to be more productive, how to work with the right clients, how to be more creative, how to get paid what you're worth, and a whole lot more. If this sounds like you, then you are in the right place. In today's episode, we're not holding back. We're talking about real nerdy tax type stuff. There is lots of juicy content on this show, all about the structure of your business. I remember back in the day being so ignorant about taxes and numbers and all that stuff. So I ignored it for way too long. And then I had to get unburied and caught up, and it was really, really stressful. There are definitely some good nuggets in this episode that should help you make some smarter and more informed decisions as you look at like being taxed and ways that you can save money. We are close to the end of this year. I can't believe it. What a crazy year. 22 is going to be amazing. I've got a lot of stuff that I'm planning for 2022, but I would love to hear from you. If I don't hear from you, then you're just going to keep getting stuff that's most relevant for me. And sometimes it's easy for me to kind of forget, like, 17 years ago when I first started my business, what were some of the things that I was struggling with and struggling through and trying to learn and overcome and all that stuff. So I would love to know, like, what are some of your goals for next year? If you haven't yet, I would highly recommend setting aside some time for you to think through, like, what are things that I want to accomplish by the end of next year. Let me know what some of those goals are. You can shoot me an email, or you can hop into the free Facebook group. If you just search, if you just go to studiosherpas.com/community, you can get access to that group. It's a Facebook group. And that would be a great place just to say, like, here's a goal that I have next year, and then here's something that's in the way of me getting there. I think it's important to be able to identify what's the thing that's in your way. So if you want to be a six-figure video business next year, by the end of next year, have six-figure salary, or maybe just six figures in revenue, there's something in the way of that goal. So let's think through that. And if there's nothing in the way, then your goals aren't really like big enough in my mind. So I want you to dream. I want you to really think strategically and let me know how I can help you. What are some specific areas in your business that I could help you with? So get over to the group and let us know, or you can shoot me an email, ryan@studiosherpas.com. Some of the stuff that we're going to be launching, relaunching, spending more time in next year, the Video Business Academy, which is our foundations course, the Onward Summit, which is our in-person event. We're going to be hosting that again in June in 2022. The Studio Sherpas Mastermind, which is going strong and which has been super fulfilling and really, really rich for all of us that are in that group. I'm also going to be doing a monthly group coaching program and creating lots more content. So there's lots of ways that you can grow your video business, but I need to hear from you. I need to know, like, what are those things? Would love to help you if I can. So get in the group, email me. Let's grab a quick word from our sponsor, and then we'll get into today's interview. If there was one thing that could have ended my business 17 years ago, it would be because of the numbers. I hate accounting, taxes, W-9s, W-2s, WD-40s, spreadsheets, all of that stuff. And I hate it mostly because I'm afraid of it. I'm just not great with numbers. If this sounds familiar, or if you're so new in your business that it's not even on your radar yet, you need Core Group. Core Group can help you create financial systems and tax strategies that you need so you can grow profitably. And they've been doing this for over 20 years. They become an extension of your team so that you can stay in your lane of expertise and then lean on them to help guide you along the way. For me, having a team of experts in my corner to help keep track of our books and just to make sure that we're budgeting for taxes appropriately, to have an actual strategy for our taxes and our accounting is priceless. And it allows me to sleep easier at night, knowing that I don't have to be an expert in that arena. If you want to avoid surprises in your video business and you want experienced help building a plan for the future that you want, both professionally and personally, head over to studiosherpas.com/core for more information. And when you're ready to set up a free consult with them, make sure to mention Studio Sherpas for a special discount too. Got your back. Get more out of your accountant. Go to studiosherpas.com/core. What's up, friends? Hey, welcome to this episode of the show. Today, I have one of my favorite recurring guests here with me, Jeremy Doorn. Sounds like Thorn, spelled like door with an N from Core Group. Jeremy Doorn, ladies and gentlemen.
What's going on, man? How are you?
I mean, I'm doing great. My mullet. You've made comments of my mullet. It's been fun so far.
It's legit, man. It's getting legit, for sure. I'm excited for you.
It is too legit to quit. So on this episode, we're going to be talking about a very sexy topic known as how do I pay myself from my LLC? But before we dive into how the heck do you pay yourself from your LLC, Jeremy, let's talk about what is the difference? You know, when you start a business, some people get into this. It's a side hustle. It's just something that they do, and they don't tell anybody except for the people that are paying them, and they do it, whatever. And then some people get more serious, and they might have a sole proprietorship or something like that, and then they might consider at some point an LLC. What would you say are the big differences between those two? Not the first one, but the other two that I mentioned.
Yeah. So the side hustle. So the sole proprietorship and LLC. If it's just a sole member, like it would be if it's a sole proprietorship and you had a sole member LLC, not a lot from a tax perspective. It's all reported on the same place. But it's really a matter of liability, right? It comes down to separating yourself out from your personal stuff, right? For an LLC. An LLC just basically carves out the business from your social security number. So now you go get an EIN, you start reporting the business as a completely separate entity. It's reported on your personal tax return, but it kind of separates that out. So, and I'm not a lawyer, so I can't give legal advice, but that's typically why you would start separating that stuff out.
And is there a point in one's business and their growth or whatever where they really should start considering an LLC versus just a sole proprietorship?
I mean, I think from day one, unless you really truly just have more of just like a side hustle that you're not really going to do a whole lot with, you're working for mostly friends and family. But if you venture outside that, I think from day one, getting an LLC, especially in most states, like here in Oklahoma, costs $100 to go register an LLC. So just to do that, and then it's $25 a year. So it's pretty easy to obtain. And if it's just you, it's not a bad idea to do that and then go set up a business bank account that's completely separate. That keeps the bookkeeping and the accounting separate as well. Having that separate bank account. So I'd say it's as soon as possible. I don't think there's any reason not to have an LLC for sure.
Yeah, it seems like the disadvantages are outweighed by the advantages of having one. I mean, my favorite, the two that you mentioned, having a bank account where all of your expenses for the business live there. If you're doing your own accounting, you will love yourself more. And if you have an accountant doing it for you, they will love yourself more. But then also this whole, 17 years in this business, I've been sued. I wanted to say more times than I can count, but really only twice. But in those instances, and really there was one time where our hard drives crashed, our server crashed, our backups were gone. We had potentially tens of thousands, if not hundreds of thousands of dollars worth of projects on these hard drives that even our backups failed. Had we not recovered those and had clients that said, what the heck, you filmed our one-time only event, or these interviews where we flew everybody in and we filmed them and now you don't have it, pay us back the $20,000 that it costs to have you there, plus, damages and blah, blah, blah. Having an LLC in with that respect, whatever personal assets I have, they probably can't come after, right? It's just the business assets. They can sue the business. So there's this protection, which I think were the limited liability, right? You're only liable.
Limited
They
liability.
can only sue the business, I think in most cases, right?
Yeah, I mean, again, I'm not a lawyer, so I can't tell you that that's a fact.
I am a lawyer, so you should listen to. Just kidding, I'm not.
Yes, you should listen to Ryan, the lawyer, trial lawyer, right? So
It's all
yes,
good, man.
yeah, it's just really about separating it out for sure. That's the only advantage there is separating it out. And like I said, it's so easy typically in a state,
Yeah.
especially if it's single member. Once you get multi-member, registering an LLC and having an operating agreement between partners is always a must, and that you've got to go to a lawyer to get all that kind of stuff drawn up.
Yeah.
So that's always important. But yeah, if it's single member, it's so easy in most states to just go get it that it's typically worth it. And you can go get a business bank account, which always helps. It will save whoever is working with you to do your taxes or your bookkeeping, whether that's you and an accountant or whoever. It's going to save everybody a lot of time, because going through your personal checking account to figure out all of your business stuff, you're going to miss something, and you're going to either be paying way too much in tax or way too little in tax, because you're not going to capture everything. There's no way.
Yeah,
So,
that's
yeah.
just. I mean, I don't even work in that stuff anymore. With all the statements and all that stuff, but I cannot even imagine having to sort through all of our personal stuff with our business purchases. That sounds like a nightmare.
It would be a nightmare.
Well, so we have this question, like, how do I pay myself? Why is that a question? Like, where does that stem from when you have an LLC?
I think it stems from everybody. I say everybody. I don't know who everybody is, but I think a lot of small business owners, video production business owners, they when we talk about pay, that a lot of times it's how do I get the money out of the business. When accountants talk about how do I pay myself, we think salary, payroll, withholding, like all of those things that come along with actual payroll, right? So like when you say, how do I pay myself from an LLC, it all depends on how that LLC is taxed, right? So like I said, you go and register an LLC with the state, whatever state you're in. So it's a state level designation. So the IRS actually calls LLCs disregarded entities. They don't mean anything for federal tax purposes, right? So there's defaults with the LLCs. And so if you're a single member, like we talked about earlier, you're reported just like a sole proprietor. You'd be on Schedule C on the personal tax return. If you're a multi-member, you would default to being a partnership, because you'd have multiple members and you would file a partnership tax return. And so there's different ways, depending on how your LLC is taxed, on how you would actually get paid. And so if you're just a Schedule C, a single member LLC, but you haven't made an S-Corp election, there's not really any payroll, because you're going to pay self-employment tax, which is payroll tax, on all of that income. And so you wouldn't pay yourself a salary per se, because you would already be paying all the payroll taxes when you file your tax return, right? And so if you're a multi-member LLC and you're a partnership, so back to the sole member LLC, to pay yourself, you wouldn't pay yourself through payroll, but you would just take money out of the business as distributions, right? So if the company profits $50,000, that profit is yours as sole owner, and you can take out $50,000 and you just write yourself a check or do yourself a transfer or however you move money to your personal account, and then spend it in your personal account. Like we talked about, having that separate LLC bank account is very important. So then making that, on a monthly basis, if you want to pay yourself, $2,000 a month or whatever, then, you just write yourself a check and that's fine. Now, if you become a partnership, or if you are a partnership, you're a multi-member LLC, partners in a partnership don't get paid a salary through payroll. They get paid what we call guaranteed payments, which again is it's almost like a 1099, like your contractors. You would pay yourself a guaranteed payment, which is just writing a check. There's no withholdings. There's none of that. And the partner at the personal level would pay self-employment tax on that stuff. So the payroll taxes get paid through that, but you don't have payroll per se. So you won't have withholdings and all that kind of stuff. Now, if you make an S-Corp election, if you're a single member or multi-member LLC, make an S-Corp election, then you're required to pay the officers in the S-Corp a reasonable salary. And we can go into that later. It's not a very fun or interesting topic, but you have to pay them a reasonable salary. So that's just like you would pay your employees a salary or hourly, whatever you determine is fair compensation for what that officer's doing for that company. It can be a salary, it can be hourly, whatever it ends up being, but that has to go through payroll. They get a W-2. And then if there's money on top of that the company's made and the S-Corp shareholders want to take dividends, then you can just write yourself checks as dividend checks based on how much if you were 50-50 and there was $4,000 to distribute, then you would take $2,000 and your partner would take $2,000. And those distributions in an S-Corp aren't taxable because again, you're just distributing the profit, and the partner or the shareholders are going to pay 100% of tax on the income of the S-Corp. So the S-Corp doesn't pay income tax. It's paid at the personal level. So to take distributions is not a taxable event. It's kind of a hard concept to get, but once you see it in paper and you do some planning with that stuff, it makes a lot more sense.
Yeah, explain it to me like I'm 5. No, just kidding.
I know.
Well, sort of kidding. We'll get there. So when I first started my business, I formed an LLC. It was just me, and then I had contractors, and then eventually employees. But I basically did what you said originally there. I had my bank account, and I had my personal account, my business account, and I would transfer money from my business to my personal. I would just pay myself that way, and then I had an accountant say, "Hey, you should actually consider forming an S-Corp or being taxed as an S-Corp." So I wasn't changing. This was kind of like mind Olympics. How do you say that? Like brain Olympic? I don't know. It was hard for me to wrap my brain around this because I was like, wait, I'm an LLC, not an S-Corp. And they said, no, you can remain an LLC, but you will be taxed as an S-Corp. And I'm like, okay, I'll trust what you're saying is true and accurate. And the way that it was explained to me was that in doing so, just like you're saying, I got on payroll. So I was making, a monthly or a biweekly salary.
Yeah.
And then if there was money left over, then I was taking, not all of it, but I was taking dividends, right? So I was getting these extra, in some months when we did really well, I took more dividends and I was like, oh, this is cool. So at the end of the year, I was paying a lot less in taxes because of the S-Corp, the way that it was set up, instead of me just being an LLC, not taxed as an S-Corp. I know you already explained exactly that.
Oh, we'll do it even more.
What's that?
I said we'll go even further.
Okay, let's do it. Let's go.
Because you want to know where the tax savings are, really, right? So like the S-Corp. So say you're an LLC and you're just single member on Schedule C. You make $100,000. That gets taxed at ordinary income levels, whatever that is, as far as brackets go. But then you also have to pay self-employment tax, which is 15.3%. So on $100,000, you'd pay $15,000 on that $100,000, right? Now, when you make an S-Corp election, you elect to be treated as an S-Corp. You take a salary, say you take a $40,000 salary. That's what you've deemed is a reasonable salary for what you do for the company. That $40,000 is now an expense to the business. So that $100,000 now becomes $60,000, right? But you personally, you're taking a $40,000 wage plus $60,000 of business income now. So you still have the same $100,000, right? But the $60,000 that came to you from the S-Corp is not subject to self-employment tax. The $40,000 wage is, and so if you multiply the $40,000 by 15%, $6,000 or whatever. So the difference between the $15,000 and $6,000 is $9,000. So you're saving $9,000 in just self-employment tax. So the real true reason that people make the S-Corp election is to save on self-employment tax. Like, I mean, because $100,000 is taxed at the same bracket no matter, I mean, unless you bring it as capital gains. But if you've got income from a business or wages or whatever, that $100,000 is taxed at the same income tax bracket, no matter what. So go
ahead.
No, go ahead.
I was just going to say, like, is there any advantage to not being taxed as an S corp in that scenario?
No. So, and that's where you talked earlier about when is it right to become from a sole proprietor or an LLC or whatever. There is income levels that I think need, because you don't want to make an S corp election too early, because if you only make $10,000 and you make an S corp election, you're actually going, because you have to bring on payroll, which is at least $100 a month. I mean, maybe you can do it yourself, but I don't recommend anybody do payroll themselves. It's a terrible idea. So you're gonna have to take on, maybe $100 a month for someone to run your payroll, full service payroll. That's $1,200 a year. You have to pay for a whole nother tax return. So now you've got an S corp tax return and a personal tax return. So you've got a couple $1,000s there. So I mean, you've got $2,000 or $3,000 worth of expenses that you're going to take on. And if you're making $10,000 and you pay yourself a $10,000 wage, you're saving zero, like we just talked about, in self-employment tax, right? Because now you're paying yourself a $10,000 wage. It's the same amount because you have to match and you're the employee. So you pay the 15.3%. And you're bringing on $2,000 or $3,000 worth of extra expenses. So you're actually in the hole $2,000 or $3,000. So until you get to about $40,000 or $50,000 in net income, it really doesn't make a whole lot of sense to get off of being, Schedule C. So yeah, there's no reason to just go do it just because.
That's super helpful. Yeah. Having that kind of that until you're making this amount, it really doesn't make sense. That makes sense. And dollars. And okay, I'll stop.
Yeah, that's perfect, right? Yeah, that's what you were looking for.
So as somebody's looking at, their revenue for the year, what their ideal salary is, what their actual salary is, all of those things. How do you figure out like what is a reasonable salary? And I've heard this ever since I started my this career. Well, you got to pay yourself a reasonable wage. What is a reasonable? What is a Wow, I'll just stop right there. What is a reasonable salary or wage, and how do you figure that out for whether you're an S corp or I guess not? But I guess it only matters. If
you're an S corp. Yeah. I mean, so the IRS really doesn't define reasonable wage, and so what I usually tell people is, go to something like, I think it's called salary.com or something, and just go. I mean, unless you're like unless you're just super knowledgeable about something like that, like what people pay, like people to manage your type of business or whatever. And usually, like if you go to salary.com or something, they'll give you a range. And then I would just take the lower end of the range because, like we talked about, the lower the salary, the more tax savings. And then just go with something that you can live with, right? I mean, it's not going to create any red flags, but it's also the audit risk out there isn't all that high for it. And just as much as you have to prove that it's reasonable, the IRS has to prove that it's not reasonable. So I think if you could just come up with a salary that you feel you can live with and you could defend, it's fine. But there's not any sort of special table or IRS rules that tell you what your salary. I mean, you can actually, I think you can write the IRS a letter and ask them what they think your reasonable salary should be, but I'm not in the habit of asking them for anything, to be honest. So I feel like we can determine that ourselves, right?
That's good. That is helpful. I always felt like this feels weird and not sneaky, but even the fact that they say reasonable, quote unquote, keep doing that, but like reasonable salary, it's like, what? it's like, here's the gray line. Where is it? It's like,
Well, yeah, I mean, and then you've got people that, I mean, then you've got the other side of the table that say, well, you should pay yourself a good salary because then that's you paying into Social Security, right? Because the lower you, I mean, if you don't pay into Social Security, you're not getting anything out of Social Security. And then there's the politics of it. Is Social Security going to be there when me and you retire? I don't know. I'm not banking on it. But again, that's more of a political view than anything, right? But if I don't pay into Social Security, then I can't get anything out of it. So some people like to give themselves a little bit higher salary just to be able to pay into Social Security.
yeah, that's yes. Yeah. So being able to, kind of know what your options are, you're able to make a more educated decision there versus like, the first 3 years or so of me being a business owner, just kind of like, I knew I was supposed to be an LLC. So if I got sued, they couldn't like take my car or my house or my kids or anything like that. Is very helpful. So we polled the audience. If you're part of the Grow Your Video Business Facebook group, you saw this question come through, and a few people had came up with some questions for Jeremy. One question comes from John Thorn. John asks, so you've got an S-Corp set up. If you have multiple DBAs connected to one LLC, which we've done back when we had our wedding film brand, and then we had our corporate brand. And I think even at one point we had a third brand. So we had 3 DBAs underneath our one big LLC. I think his question is around how do you take salary or disbursements when you have multiple DBAs connected to an LLC.
I mean, I think it's the same way. It's just different numbers. I don't think that changes a whole lot. It just depends on where. I mean, if you were going to pay a certain salary based on the percentage of a certain job or something like that, then you'd have to keep track of that stuff. But what he's talking about, I think, is having kind of departmentalized income statements, which, I mean, you could, you could allocate out the salary to all the different ones. But the distributions, I mean, it's all going to come from the one company. But if you've got different bank accounts and stuff like that, then you would just prorate them based on, I would prorate them based on how much, like what the profit of each business was, like the total profit, and then like the percentage of each one of those and how much, and then you could know how much you're going to do as far as distributions. I mean, that would be a great thing for something like Profit First too. That would be something you could do with Profit First as far as setting some target allocations based on the different incomes of all the different DBAs. But it doesn't change the overall number, right?
Although, like, what's really smart in a situation like that is to know. I mean, one of the reasons why we shut our wedding brand down is because our revenue after we launched our corporate brand, it was like year one, we were at like 60% our wedding brand, 40% revenue for our corporate brand. The next year kind of flip-flopped. And then the year after that, it was like 80%, 20%. Our corporate brand was like crushing it. So for us to have visibility on like, well, what is each one making and which one's not, allows you to make some informed decisions. And at the end of the day, like, I was the owner for both of them. So I was paying myself the same disbursement, but for me to know at some point, say like, you know what, either we need to really raise our prices for our wedding brand, or like, let's just bring that under the umbrella of this corporate brand. And if weddings come, they do. And if they don't, like, not a big deal, because they're not our bread and butter anymore.
Well, and what services are profitable. You know what services to go out and chase, right? For sure.
Yeah, I do.
Yeah, you do.
Let's see. Ben has a question. Ben has a partnership, and he's curious to know the best way to pay themselves because of big personal taxable income that they have.
So without knowing or seeing your numbers, in a partnership, you're going to run into the same thing as like a single member. Oh my gosh, that sounds like you.
It's rubbing off.
Yeah, that you're going to run into the single member LLC that's taxed on a Schedule C, where it's all taxed with self-employment income. Partners, managing partners in a partnership that are working in the partnership, all that partnership income comes through to you with self-employment tax on it, right? And so that's where you need to probably go ahead and, if you're having really large tax bills, I mean, that's probably a pretty relative term, but if you're having really large tax bills, it's probably because of self-employment tax, and it's probably time to start looking at that S-Corp election, because I mean, you could still be an S-Corp with multiple members, of course. And so you want to get out of that partnership for tax purposes and get into an S-Corp and start paying yourself an actual salary so you can get around some of those self-employment taxes for sure.
Yeah.
Yeah, that's
awesome.
That's a great example of it's time to start getting into an S-Corp, or at least looking at it. I don't know what, like I said, I don't know what the numbers are, but it sounds like it's a great time to start looking at, becoming an S-Corp for sure.
Then maybe it's time for you to call Jeremy at Core Group.
Make that happen.
I don't know.
Make that happen.
Free discovery call, right? Right, Jeremy?
I'll talk to anybody. You know it. Bring it.
Talk to anybody. Let's see. Nick Olivas asks, what is the best financial strategy for paying yourself, saving for taxes, and paying your expenses when first starting out as a self-employed one-man LLC before one moves into being taxed as an S-Corp? Tell us all the things.
Tell us all the things. First, I think like we talked about earlier, I think it's most important to get a bank account, separate bank account, run everything through a bank account. And then it's really important to get some sort of bookkeeping, some sort of way of looking at how your business is doing. I know we want to manage by our bank accounts, and accountants tell us not to. Profit First kind of helps you manage by bank accounts, which is fine. But you also have to know, you've got to get with somebody that will help you plan for what the taxes are going to look like. Because you can, I mean, I had the thing about it is when you start a business and you're used to being paid as an employee, and all this stuff's basically taken out of your paycheck, and you just go file your taxes and get a refund or owe some money at the end of the year, right? When you own a business and it starts making money, you start getting hit. I mean, you don't pay taxes on it all year, and then you get a tax return, and it's like, whoa, what? I owe what? And it's like, wait, why do I owe so much? And it's like, well, you used to pay that, but you never really saw it because it just came out of your paycheck. And now you got to write these big checks. And so it's really important to just start planning and looking at what your company's actually making, because maybe it's making money and maybe you've been taking distributions. And a lot of times people go, oh, well, I only took $20,000 worth of distributions. Well, that's fine. But if the company showed profit of $100,000, you're still going to pay tax on $100,000, right? Regardless of what your distributions were. We just talked about it. Your distributions aren't taxable. So those don't really have anything to do. So getting with somebody that knows small business taxes and can help you plan for that stuff is super important. Or you're really going to end up with a big crap surprise on your desk on April 15th. It's not fun. It's not fun for this guy either, I promise. It's
nobody
not
likes
fun.
Big fat crap surprises. Like nobody I've met to this point. But
yeah, they're not fun conversations to have. So I think that's most important, especially if it's a business that if it's truly a side hustle and you're not going to do much of anything with it. I still think it's important to have your own little QBO and do that sort of thing on the side. But if it's something you're really trying to grow into something and making real money doing it, and you really want to take a hold of planning for taxes and making sure the money's there, you got to get with somebody. You can try to do it all on your own. It's going to take too much of your time. You guys, especially here in the video industry, you guys are all very creative. You don't like looking at numbers, right? You get sick when you have to look at numbers, I think is what you told me this morning, right? Like
it is.
And you don't need to be wasting time fumbling with a whole lot of numbers, right? Because your time can be better spent making videos, doing stuff for other people that's bringing your company value, right? And so doing this and getting caught up in all this crap is not a good use of your time. You need to get with somebody as soon as you know this is something you're going to do for real.
Yep. And I mean, to that point, like if you've heard any of the sponsor ads or anything, you'll know this is a true story. Like one of my favorite things that I spend my money on is to not have to think about or worry about the financial stuff. But we bring Core on as our financial partner. It helps us plan for taxes, helps us with our accounting. All of that stuff it is one of the best uses of my money. It's like the thing about it, though, I will say, it's like, when you do an upgrade on your house and it's like something that you don't ever see. Like if you get a new furnace, it's like, cool, I got a new furnace. The house is still warm. But the thing is, if you don't have the furnace, like the house is going to be cold. It's like, it's not an upgrade that anybody sees or feels, but you do feel it, right? The pain of like having to go through, do this on your own, try to make your best guess. It is like, this has been one of the best investments for us to have a trusted partner that on multiple levels, you guys take care of our payroll. It's not just like, hey, where are we spending too much and how much should we be saving for taxes? It's like real strategic stuff as we strive to be profit first, applying the Mike Michalowicz profit first method. You guys are profit first centric, certified.
Yes. Centric.
So all of those things, when combined, make sense. And it's not, it's not a good fit for everybody to work with core group, but at some level, just like you shouldn't be an S-Corp until you're making, we said $40,000 to $50,000. I don't know what the level of stress and frustration, what that's worth to you, but at some level, bringing on somebody like core group makes total sense. So that you're not having to spend your time and energy, your creative energy, having to figure out all of the taxes, payroll, numbers, stuff that is really better suited for somebody that's passionate about it and really good at it. So, Jeremy, with that, how can somebody get in touch with you if they're interested in hearing more about how Core Group could help them?
Just have them go to coregroupus.com, and at the bottom of that front page, there's a button to book a discovery call. Totally free. Go there, and we'll connect with you.
And that number, once again, is www.coregroupus.com.
Like I had to tell myself to not say it even that time. Like, what is wrong with? I'm not old, Ryan.
Oh, goodness gracious.
I'm not old, so, just lame.
That is super helpful, Jeremy. This information, when I set out to create Studio Sherpas to really help other videographers that are wanting to start or grow their video business, the financials is like, it is one of the core. It's like, if you're not making money, if you're not profitable, if you're not charging enough, you're not doing those things, then you just have a super expensive hobby. And if you want to create something that can be something that really creates wealth for you, for your family, allows you to do things that you would never be able to do because of, your financial situation, you have to really get some basic understanding of your finances. And in my mind, get somebody that's an expert to come alongside you to help you. So as like boring of a topic is, we're going to talk about financials and taxes and LLCs and all that stuff. It's like, it is essential to really get a grip on what this stuff is and how it can help your business and make some really educated decisions. So I hope this was helpful as you're listening. Jeremy, for me, I'm really grateful that we got to do this. Thank you for letting me laugh with you, alongside you. Appreciate your expertise and your partnership.
Of course, man. Always a pleasure. It's always fun to laugh.
All right. Thanks for hanging out with me on this episode. Don't forget, you can get access to the show notes for any of the links or the references that we made on this episode. And I would love to hear from you. This content, what I do here on the show, the guests that I have on, the topics that we talk about, if I know what you're struggling with, what you want to hear, what you need to hear, it will just make it more impactful and better for you and, quite frankly, for me, because learning together is probably one of the best things that I've learned, how I've grown as a person and as a business owner. So if you're watching this on YouTube or on Facebook, leave a comment. Let me know what's stuck. Let me know if you have any big questions. Would love to hear from you. How many times am I going to say that on this episode? But I feel like that's the theme. Remember, you can jump into our free community if you go to studiosherpas.com/community. And some of you haven't yet accessed the free workshop that I've hosted. You can get access to this workshop if you've ever had a client meeting and you wondered, like, I don't even know, I'm not sure what questions really to ask. And you get off the call and you're like, man, I have no idea. I don't know if this is a $50,000 project or a $5,000 project, or, I mean, it could be either of those, but I have no idea what this client has, what their budget is, or how much they want to spend. This workshop that I am going to give you for free walks you through our process for how we get those numbers on a call without it being weird. So go grab that workshop, get access to that workshop. You can go to studiosherpas.com/budget, and I'm sure it will help you, or kind of just like maybe reinforce some of your approach when you are on Zoom calls or having phone calls with potential clients. Follow us on Instagram at Grow Your Video Business. I'm also at Ryan Coral. Reach out if you need anything, Ryan@studiosherpas.com, and hope you have an awesomely amazing week. And I'll talk to you real soon. See you next time.